Welcome everybody that's on board. We have Mr. Phil Humber with ABM Insurance. Just to let you guys know, it's a lot warmer when we can see your faces instead of just seeing that black name and white text. So we love for you to we invite you to turn your cameras on. But Mr. Phil Humber, he's with ABM Insurance and Benefit Services, going to do some training today as far as the vendors that every realtor should have. The people that are in the building, we're going to go ahead and allow them to get their sandwiches, and we'll just say chat and chew.
We're going to do a little chat and chew. Are we live already?
Yeah, we live.
Well, while everybody's getting their food and stuff, good afternoon. My name is Phil Humber with ABM Insurance and Financial Benefits or Services, however you want to put it. We're not going to do one of those fancy PowerPoints today because that's really not my style or whatever, but we do have a board up here. We're going to write a few things down, ask a few questions. The thing about ABM Insurance, well, first let me slow down and give you my background. I come from a real estate market. I've been doing insurance roughly about 12 years now. I'm what you call an independent agent. We'll get into that a little later on doing this presentation or whatever. But where was I going here? Wow. Okay, I'm back now. We're going to talk just insurance. Of course, I do home, auto, life, commercial, flood. We're going to hit on a little flood insurance for you real estate agents also. But today, let's just talk about some homeowners insurance. And we're going to get going here. First, we're going to ask a few questions. After we ask a few questions, then I'm going to come back and give you guys some terminology as real estate agents that will be helpful to you to know right off the bat. So first question that we're going to ask is, what should you consider when choosing an insurance agent? What should we consider when we choose an insurance agent? You need to find an agent that is not all about rate. A lot of times people get caught up just in what you call the rate, the premium, but it's a lot more that goes into that you need to be aware of when your client or even yourself is looking for homeowners insurance. You need an agent that wants to take time and explain this to you, explain homeowners insurance to you. We don't know. A lot of times, all we do is just look at our insurance rates, but we don't really understand and know what we're looking at. A good insurance agent will sit down, take their time, and explain coverage by coverage by coverage to you guys. And we're going to get off into different coverages later on throughout this broadcast or presentation. There are a lot, there are a lot of order takers. A lot of people can take your order. A lot of people can bind your insurance. That's good. But you need someone that knows insurance and that can counsel you on insurance. A good insurance agent, they're going to listen to the client. Again, a lot of times I know for myself, especially when it's first time home buyers, either that real estate agent called or that mortgage company called us. But even after they call us, what I've learned is the people close. We've gotten to the table, they've closed. Well, 6 months, a year into that, it's an issue going on with the client. And I've gotten clients that say, hey, Phil, blah, 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 blah with my insurance. And they may not have gone with me for their insurance because they're real to pick the insurance agent by or the mortgage company. And then I'll ask, who is your insurance agent? They have no clue of who their insurance agent is. And so when you're deciding an insurance agent for your client, an important thing for you guys to do is once that agent send you or send, and most of the time the agent will send the mortgage company the quote. That insurance agent need to call that client who they quoted and introduce themselves with phone numbers and everything. Another big issue that I'm seeing out here a lot of times from clients is my agent don't answer the phone. It's easy to call that carrier, but the thing about calling the carrier is most of the time, and this is with all carriers, you better have a patience of Job. Because once you press 1 for this, once you put in your policy number, once you sit on hold, once they transfer you to this department and that department and that department, we're tired. We're tired. A good insurance agency, which you go through the agency to get to the carrier, that agency that had wrote your policy for you or quoted your policy for you, if you're going to pick a good agency, they should have what you call a CSRT, customer service team. And that customer service team, like at our agency, ABM Insurance, like when I write somebody a policy, because I'm a sales guy, once I write somebody a policy, let's say, for instance, you want to add an endorsement, and we'll get into endorsements later on. You want to add an endorsement to your policy, or you're not understanding something, or let's say your lender need a new mortgagee clause change or whatever. You should be able to call your agency and talk to a customer service rep and say, hey, my name is Miss Such and Such or Mr. Joe Blow. I'm with your agency and I need such and such and such and such done. A lot of times that insurance agent or that agency can get to the carrier, or they can resolve whatever the issue is a lot faster than the client can. So again, those are some of the things to look for when you all are referring your clients to an insurance agency. Do this agency answer the phone? Are they prompt? Rule of thumb is, and I always tell people, because I get calls all day long about new quotes, and and I take the people information down. Rule of thumb is to keep ourselves safe. And so the realtors and, realtors, sometimes you all can get a little hairy around the edges or whatever. But anyway, rule of thumb is you give your insurance agent 24 hours. 24 hours is enough time or whatever. You give them 24 hours, and we usually email again, you all the quotes, or the lender, the loan officers, or the mortgage company, the quotes or whatever, but everybody is kind of working hand in hand. So again, that's number one. What should we consider when choosing an agent? Do they answer the phone? Are they prompt? Will they take time with the client and explain everything? And will they listen to what the client needs are? Number two is, and again, you all have to excuse me, I'm a board writer because I'm a football guy. So it's the way I do stuff. Number two, what should you consider when choosing an insurance carrier? You have the agency, which I'm the agency or the agent. But carrier, when you say carrier, Allstate, Progressive, Safeco, Travelers, Homeowners of America, gosh, there are so many out there. Those are the carriers right there. When we are looking and choosing an insurance carrier, when picking a carrier, you want to make sure that the carrier has the money to back up their clients. You can look on some of the Better Business Bureau raters or whatever to see how this carrier handle their claims when it's a catastrophic event going on or whatever. Now, well, I don't want to just go there just yet, but we're gonna get to a little flood too. But when you're, we as insurance agents, when you send me over realtors or mortgage people, they send me over a quote. They say, okay, I need Miss Ann, this. I can almost, because I've been in the business a while, I can look at that and I can say to myself, well, what I do is I put it in what you call a system. And once I put all your information in the system, I'm going to put the property address in there. I'm probably going to go on Google, go to Google Earth, look at that house or whatever to see if it's brick, veneer, hardy plank or whatever. I put it in the system. All the carriers in our company, we have about 30 carriers, but honestly and truly, out of that 30 carriers, I probably use about 5 to 8 of them. And those are what you call your know for sure carriers. So by the information you all give me, I kind of know what is going to fit the mold of this property right here, and also you have to look at the endorsements that this carrier have. Biggest, huge endorsements that I usually see that a lot of insurance agents don't do because a lot of them are, again, rate driven. But as grandma used to say, you get what you pay for, and with that rate driven stuff, yes, it is fine that the rate is low, but what are these people truly getting? So I always look at what endorsements the carrier have, and an endorsement is water backup, roof replacement. Let's say, for instance, you have some nice jewelry or whatever. Jewelry. I'm gonna ask another one is that people don't realize is your pets that you have. Now, if you have little teacup poodles and chihuahuas, even though chihuahuas are mean little fellas, but they're not on the bad dog list. Bad dog list, Rottweilers, which I have, German Shepherds, Pit Bulls, those type dogs, I call them muscle dogs. Is it an endorsement for that right there? So again, if Roscoe get out the backyard and go bite the neighbors, will your insurance company cover that? So those are things that we look for when choosing a carrier. I had an incident here last year where, and it was a personal friend, he lived on 5 acres. Well, I hadn't seen him in about 2 or 3 when he bought the house or whatever, and he didn't use me. He went through the mortgage company or the realtor guy, so he used them. Well, he called me and said, man, this is after a couple of years, man, this insurance is really high or whatever. You think you can beat it, Humber? I said, I don't know, let's see. So I got his address, beat it, even put some endorsements in there, nice endorsements that it, and beat it by like $2,500. But always remember this, realtors and loan officers or mortgage professionals, we have them out there today watching. That insurance carrier is not an if, it's not a maybe, it's not a possibility. They are gonna inspect that house. They are gonna come to that residence. They don't inspect the inside, but they're gonna inspect the outside. So back to my story here. The insurance carrier within about 3 weeks go out to his house. And again, he lived on 5 acres in New Caney, kind of rural area. Well, now he have 8 horses out there. He have some cattle out there. He have some chickens out there. He have 3 Rottweilers and 1 pit bull out there. He have a trampoline out there. He had some old cars he was rehabbing out there or whatever. And it just killed my deal. I mean, it just killed it straight up. But the good news is I did have a carrier who would take that farm animal. Well, I had to tell you, you got to get rid of one horse. He had one too many horses on the property. But, you know, again, like I said, I did have a carrier who would take that. So back to our question, what should you consider when choosing an insurance carrier? You should consider the property, the client, and what they have and what they don't have. When I speak with a client, and especially when it's a call in to the office and they say, well, hey, I need insurance or whatever, or even if it's one of my realtors or mortgage professionals, I always ask, you know, those questions. I usually get in detail. Do you all have a trampoline? Trampolines are huge. No-nos. They are just huge. You're going to get all your kids out there. And if you like me, you have boys. Well, mine are adults now, but I can remember having boys and all their friends come over. They get on that trampoline. They fight. They use bad words to each other and stuff, putting each other in headlock. Well, then somebody got broke on. Bottom line. So insurance carriers don't like trampolines. Another thing, huge, and everybody needs to take note on this, whether you are looking at us online or whether you even Miss Jason Denny in here today. Huge, huge, huge. Number one thing, and I'm gonna just write this at the bottom. Did I spell that right? Yeah. Roof. Roof. I'm gonna say it again. Roof. That roof is very, very, very important. And that is gonna a lot of times be a huge rate factor in that right there. That roof, anytime you all are out in this, let me say this, realtors, anytime you all are out showing houses and everything, not trying to tell you to do your job, but for the sake of your client, find out how old that roof is. Bottom line. I mean, because your insurance carrier is gonna inspect. When they come out and inspect, they may do like this right here, but well, they used to get on top of the roof. They don't really do that anymore, but they're gonna fly that drone on top of that roof. And I've seen a lot of deals killed with that roof. That is more major than anything else, is that roof. So when you all are out showing houses or you all want to get in contract with a house and stuff, not saying don't do it, but if that roof is 10 years or well, about older than 10 years, you need to start doing some serious negotiation. And a lot of times what I've seen happen with roofs too, I had another client, she was a single lady. She wasn't buying a house, but she was redoing her insurance. Well, the story goes, she had a 2-story, again, a single lady. Didn't know, but I buy the insurance. Here we go again. Great policy. She loved it, beat what she had or whatever, and didn't know who her insurance agent was, but she just went through the mortgage company. Well, at any rate, insurance company, carrier rather, goes out there to do their inspection. Because again, what I said, they are gonna go inspect. She has a whole hole in her roof or whatever. She don't know, it's not my roof. And I finally had to say, Miss Lady, I need you to calm down, because if you have a hole in that roof, that's something you need to know about anyway. I said, you a single lady? Well, I said, when the last time you even been upstairs in your house? And then everybody called me coach. She said, well, coach, you do have a good point there. Well, by the time she did go up there and the insurance company kind of told her where the hole was, a whole closet was ruined with clothes, winter clothes in it and everything. So, you know, a roof is a very important. Now, I do have carriers. When you go back to the question, what should you consider when choosing an insurance carrier? I do have carriers. I've asked, when was the house built? The house was built in 2002. Have you had a roof replacement? No, it has not been a roof replacement. I do have some carriers who will take that, but they'll probably take it on what you call ACV, actual cash value. We're going to get into that later on, replacement cost versus actual cash value. So next one is moving right along, because I don't want to bore you all. Difference between independent agent and captive agent. What is, let's start with a captive agent. A captive agent, for instance, farmers. Farmers is a captive agent. That means they write for nobody but farmers. If you don't fit into what farmers consider a good insurance quote for them, they just don't take you. Geico is a captive agent. A lot of independent agents, we can't write. All State Farm, that's a captive agent or whatever. Now, your independent agents, we write for several carriers. So in other words, you may not fit into Progressive. I may can write you with Liberty Mutual. You may not fit into Liberty Mutual. In other words, independent agents have options for their clients. It's not like, it's not taking anything away from captive agents. I mean, they've been around, of course, like farmers, been around forever, you know, but they're a little high, you know what I mean, but they've been around forever. Allstate is not, because we write for Allstate. We have Allstate. State Farm, again, they're captive. So they're not bad. Most captive agents have what I consider a household name, been around 100 years or whatever. So, but again, when you consider a captive agent, just remember that, realtors, mortgage people, when you consider a captive agent, if that client does not fit into what they think is insurable, they're going to kick it out. They just can't do it. It's either this way or no way at all. With your independent agent, I can say, well, Liberty Mutual came back at $2,500. So let me see what Travelers is gonna offer. Let me see what Progressive is gonna offer. Let me see what Sage is gonna offer. So we have a lot more options when you start talking your independent agents. What is used to determine insurance carriers when they're evaluating risk and determining rates? Good one right here. What is always is several things. That's kind of we can go on forever with that. Y'all be going to get more sandwich boxes in there. But property and person, as I like to call it, the property and the client. And just a rule of thumb, realtors, when you all doing demographics, when you hear them say this is close to the coast or whatever, they're not truly meaning like the Galveston coast. They're talking about it's a body of water there, whether it's a canal, for instance, Fort Bend County, Sugar Land, in some of Katy, they're close to water somewhere because rates in those areas, they are high. They're very high. And it's all has to do with bodies of water. Where that is, somebody, we was in a meeting the other week and they was explaining that in the office because we had a carrier come talk to us. And I don't remember because I probably was playing on my phone and wasn't paying attention. But no, really, I'm gonna give you another one. Channel View, a lot of the east side. Why? Because the port is there. And that's a body of water. It doesn't have to be Galveston. Now, when you start talking like the Woodlands and places like that, their rates are a little lower. So it's all about when you all are showing houses, you can just wrap your mind around when you start talking like Fort Bend area, you can already say their insurance is going to be a little bit higher. Another thing, the area, whether it's a high-risk crime area or whatever, that plays a major part in rates. Another one is, and everybody gonna be like, oh Lord, on this one, credit. Credit is huge. I mean, credit is huge in insurance. I was doing a deal the other day, and I had the lady at $1,500 for the year. Great policy, and it was a loaded policy with all the endorsements. Soon as I put hit, and they don't really do what you call a hard pull credit. You know, they don't do a hard pull. What kind of pull they do, but it doesn't show up on your credit report. I do know that. But once I hit run, we call it run rate or whatever, when all your stuff come up, it shot up to $4,000, and because of F credit.
Wow.
Yeah. Claim.
It's called the soft credit pool.
Soft credit pool.
The soft credit pool. Thank you, whoever that was. Ms. Erica, thank you. But where was I? Yeah, sure. Claims. How many claims? Let's say, for instance, you didn't live in this house, but it was a claim filed on it. Once I run my reports on that house right there, if it's been a claim on that house right there, if it's been, they've had something, they filed the insurance claim, even though it wasn't you and you didn't live in the house, the claim is still gonna show on that property right there. Another one is, and this is huge in car insurance, not so much in homeowners, but it plays a factor. How many claims have you filed? I try to tell people, yes, we do pay insurance or whatever every month, but how many claims have you filed as a person? You know, so all of that type of stuff plays a huge factor when we're talking about, you know, rates and stuff in insurance. Now, questions. Let's go to some questions, because now we're going to go into a little terminology. And I'm not moving too fast, Emma people. Anybody have any questions out there that's online right now on the Zoom?
Yes, I have a question. This is Erica. Why is it, and I guess it may be regulation, I may be answering my own question, but why is it that the insurance companies factor in previous claims when you weren't the homeowner? Because they just have some individuals who just love to, you know, file insurance claims for everything. Why should the next property owner, you know, suffer for that?
You know, Ms. Erica, and I'm going to be honest with you, that's a great question. And my answer to that question is, I have no idea why they do that, but I'm going to consider, and I'm just going to take it from an auto aspect. In auto insurance, for instance, if that car has been in a wreck or whatever, you may not have owned the car, but if that car has been in a wreck and it's been reported, that's gonna go against your rate, because that car has been rehabbed and repaired and it wasn't in the natural state of build that it once was previous. So we're gonna say that's probably the main reason, even in homeowners insurance, that works like that.
So
Got it. I guess that makes more sense, because they don't know if it was repaired back to the original form, or even if it was repaired right.
Exactly. There you go.
That way it makes sense. I guess that makes sense, but still, they should just come expected. Okay, I have one last question. When it comes to the flood insurance, is it still true that like you live in a ex-flood zone, but if that property had more than 2 claims, then you still have you would have to be required to pay flood insurance? Is that still true?
That's very true. And you know what? I wanted to wait to talk about flood, but since
Oh, sorry, I hijacked.
no, that's all right. You woke up the sleeping giant, Miss Erica. So let's go ahead and talk about it. Flood insurance. Flood insurance is different from home insurance. They're 2 different policies. Flood insurance is, and you all excuse me here, let me wipe my board, wipe my board, wipe my board, wipe my board. Flood insurance is through what?
The government.
Man,
Yeah, the federal government.
you can go get you get an extra lunch box for that today.
Wait, hold my lunchbox. Hold on. Put it in the
Well,
refrigerator.
you know, Miss Erica, you should come to, I bought plenty lunch boxes.
Good.
Flood insurance is through the government, FEMA. It's a government entity. Now, this is the way flood insurance works. Always remember this, write this down. Again, it is not part of your homeowners. Water come down, it's coming down, homeowners insurance cover it. Water comes up and rises, flood covers it. Now, it used to be a time, and this just happened here, what month are we in? October. This just happened September. What am I coming for? September, August, golly. August. This just happened in August. Flood has changed. The rate has changed dramatically. It used to be in flood insurance. Everybody write this down too, please. You need to know this. On your dwelling in flood, the max it'll go up to is 250.
It's 250, right?
250. On your y'all make sure I'm spelling right. You know, my wife is an educator. She told me today because she really wanted to do me a PowerPoint because she said you can't spell. I need to do. If I'm spelling wrong, y'all just ignore that right there. Now, that is the max you'll ever get in flood insurance. On dwelling, the building, 250. Personal property, 150. We know personal property is all your stuff inside the house. It used to be a time up until 2 months ago that equaled $572 for the year. It used to be this right here. No matter, the only time it was higher if you lived in a
AE.
flood zone and that house flooded. For instance, mother, I don't know, some of you all might be too young to remember Allison. Allison flood, y'all was just some little babies back then. Yeah, y'all just some little babies. No, you wasn't in high school for Allison, because I was in high school for Allison, and I'm 50. You talking about Ike.
No, Allison, because in Allison, I was in college. It's 2000, 2002,
2002. You high school? All right. Well, you look like you just graduated from high school. But anyway, during Allison, my parents' house flooded. Then Harvey came in 17 and it flooded. Well, my mother's not homeowners, but flood insurance was super high when she went. And so she said, and around the corner from her house, Right around the corner, she owned another house, but it was converted into a daycare. Well, she didn't have flood insurance on the daycare. Well, after the storm, she wanted it. And I said, well, mama, it's gonna be like $5,000. And she said, well, why? I didn't file no claim on that house. I said, so mama, what you're telling me right now is every house in the neighborhood flooded, but your daycare center. It worked like that right there. If you are in a known flood area, that's the way rated. Now, this right here, $572, that is out the door now, people. They don't do FEMA flood like that anymore. Flood insurance now is based upon the property. I don't live in a flood zone. They do not care. They are rating the house and everything now. I've watched people go from paying this and then now I've gone to renew them because their year is up and it's been $2,000 or whatever. And like when storm season first started coming, I was telling people, and I would make videos, get your flood insurance, get your flood insurance, get your flood insurance. Because if nothing else, they would have now been locked into that 572 at least for a year. And now some people come, I need to get some flood. And it's sky high now. So the rule in flood for all of you all who have an idea, like Ms. Erica out there, who know a little insurance, I'm saying, Ms. Erica, the rate in the game with flood insurance has changed now.
You're making me nervous. I don't want to anticipate my quote next year, Lord.
I didn't mean to bust your bubble. You gonna say, get that guy out of here, please. But no, flood has changed now. So now the limits is still 250 on dwelling. It's still 150 on personal property, but rate, guys, rate, no, it's out the window now. It's out the window. And what is happening is, well, see, what we have to understand, just a little background or whatever, and we'll get back on task here. Insurance carriers, period, do not like Texas. We have too much catastrophic stuff going on here. Here, the last 3 months, I've watched some carriers. They didn't go out of business. They've left Texas. Yeah, they've left Texas. So, and in Texas, especially Houston, they know we're flooding and everything. So again, people were paying that 572 or whatever and getting maximum payout on their properties. And so the government had to come in, and the government are who they are. You know what I mean? They had to come in and they just switched the whole game up with that. So again, now we know that we have home, homeowners versus flood. And we know with flood, it's water coming up. There you go. There you go. There you go. See, you one of those kids in school that nobody liked because you had all that. We call them overachievers, you know. And we know that water coming down, homeowners covered. Questions before we move forward?
So I do have a question.
Sure.
So why, when it comes to homeowners insurance, does it matter if it's by a body of water?
More potential to flood.
They still know if it's by that body of water and it started raining, or they know it's gonna flood, even though flood covers it. Still, homeowners somewhere in there is gonna get kicked in somewhere. You know what I mean? So it may not say for instance, water coming in like this, hitting against the house or whatever. It's not necessarily coming up, but let's say the wind is blowing and hitting against the house or whatever, and water seeping through the windows or whatever. Well, they know homeowners gonna have to cover that right there.
So the water will be seeping from whatever body of water?
Yes, say for
Because if
instance,
it's the rain and.
say for instance, it was like what we call wind, hail, blown rain. Homeowners cover that right there.
Right.
And so they know whenever you're close to a body of water or a canal or something, and you got wind blowing, well, the rain is gonna blow with and the water is gonna blow too. And they just thinking rain or whatever up against the house from that body of water. Well, they know it's gonna start seeping somewhere, whether it's through the roof, whether it's through the windows. If you don't have these new fancy dancy windows or whatever, they know somehow or another that they could possibly be responsible for that. And all it basically is that, like we tell people, insurance is covering risk. It's just covering risk, and that's a high risk. More questions. Ms. Erica, I know you have another question for me.
I do, but I don't want to seem like an overachiever.
Right. Go ahead, too late. Too late.
Late.
Too late. We already see you as one. So go ahead.
Oh, Ms. Erica, I need another question, please.
Okay, what about home flood insurance with renters insurance? Is that covered under renters? And if not, can renters get a flood policy?
They can. Have I ever done one? No. And I've been in insurance forever. But yes, you can get flood insurance if you are a renter. Right now, if you ask me the rates on that, well, I couldn't even tell you the rates on flood because it has to do with the property and everything. But yet, to answer that question, yes, renters can.
Because flood is not covered under renters insurance.
Correct.
Okay, all right, yeah.
Correct. And then even when you start talking about, we got homeowners insurance, but a lot of times with realtors, you all do lease and rent properties or whatever, where they can quick money, right? Quick. Well, even with that right there, now the difference is what you do is what we call it's basically just a renter's policy, or we call it a tenant's policy, and they're not covering, the insurance is not covering
The building.
No, they're not covering, they're covering the content, your inside of the house. Yeah, that's what they're covering. And it's what I tell people, somebody was asking me the other day about that, and they was like, well, how much can you go up to in contents coverage? Because what I usually ask the client is, how much contents coverage do you need to have? Not discrediting the area, so don't you all take it that way. But if you live over in Fifth Ward of Northwood Manor, you don't have $300,000 worth of contents in your house. And if you do,
You're in the wrong area.
but
Risky for the
yeah,
insurance.
I'm talking about stuff that you actually went in that store, purchased, and got receipts of. Because what an insurance company is gonna do, I'm gonna tell you. Let's say, for instance, you lived in the Woodlands, Memorial, or you were renting a house over there. And not even renting, but if you own the house, and let's say something happened and you filed for $100,000 worth of contents, the insurance company they're gonna look at it, but they're probably gonna go ahead and play that claim. But let's say you live in, let's just be honest, a lower income area. It's not right, but put yourself in the insurance carrier shoes. They're paying out. And every time an insurance carrier pays out, guess what we take a risk on? Rates going up.
Right.
Not free. And people don't understand that. It's not free. But where was I going? Oh, yeah. So, for instance, what the insurance company will do is, let's say you live in a high-risk crime, or you just live in a lower-income area, and you're filing all of this stuff right here. They're going to ask you to produce some receipts.
Right.
They're going to ask, bottom line, somehow or another, they're going to want to see it. And I usually tell people also, and you all can tell your clients this, when it comes to them, no matter where they live, and this just kind of keeps the red tape down, when they get in this house, all their high dollar valued stuff, TVs and things of that nature, you keep receipts somewhere, or you take pictures of serial numbers. That's important right there. I know it's saying a lot, but it is important. So now let's go ahead and talk a little terminology. Uh-oh, I lost my eraser. Oh my goodness. You have replacement costs versus actual cash value. Replacement costs is what basically all we write insurance on, is replacement costs. And if you all are showing houses and these people find a house and we're going to go ahead and do this deal and get in the contract, and you all call and say, hey, look, I want to get some insurance on this property, blah, 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 blah. I'm going to write it on replacement costs. And 99.99999 times the lender is going to want it wrote on replacement costs. And all replacement costs simply is what will it cost to replace this property if something should happen to it? What will it cost? Not at what you bought it for, but what will it cost at today's cost to replace it? You may have bought it 5 years ago. Let's just say use $100K. That was 5 years ago. Well, in today's market, it's probably has shot way up to
185.
what now I'm going to say about 210. Let's just use 210 to 210,000. So we want to get 210,000. ACV, actual cash value, is whatever you paid for it, that's the actual cash value that they're gonna give you. Now, when you start talking about, and you all may want to write this down, when you want to guesstimate how much the dwelling replacement costs, give and take, will be on this property. You are showing a property or whatever. This property is 2,100 square feet. And you just want to know what, even from an appraiser standpoint, which an appraiser is going to be a little different, but it's going to still put you in the ball. What will the replacement costs on this house be? Very simple. The house is 2,100 square feet. Take that, multiply it by $100. Then, when you get that, what is that? Now, what is that? 210,000. Now, because we know right now, since COVID, groceries, gas, and everything else has shot all the way up. That's why I'm so glad I don't have no children in the house with me anymore. But anyway, everything is shot all the way up. So what we as insurance agents been doing to really guesstimate dwelling costs is we'll take the square footage multiplied by 100, get that number, and we'll add another 100,000 to it. Very simple. Somebody just asked, who was that?
Ms. Shantae,
Miss Shantae asked the question.
why do they charge 2 to 3 times for replacement costs?
Because the main reason is it goes back to what you bought the house for 2-3 years ago versus what it would cost to replace it at today's cost. Those are two different costs now or whatever. A house is not like a car. A car you get off the lot depreciates. A house starts appreciating every year. So again, you know, they'll do 2 or 3 times that value to make sure that we are getting enough coverage. And again, like I said, you all as realtors, when you start wanting to just play with it and get it in your mind, again, you all take the square footage of that house, multiply it by 100. Once you get that number, then in today's inflation, add another 100,000 on it. Now, we as insurance agents, what we do is we don't set the value of a house. We don't. What we do is you call me, you say, I got Miss Mary Ann and Mr. Joe Blow. I put their information in the system. You give me the property address. I put the property address in the system and I hit submit in a system we call Easy Links. Easy Links have all my carriers in there. All my carriers come back with a quote and a rate. They give me dwelling, and some of them, and they all within $100 to $1,000 in dwelling costs. They're all come between $100 to $1,000. And when this carrier might say this property is worth $300, the next carrier might say $305, or they may say $295. So they all within that ballpark range or whatever. But just to keep you guys on the safe side or whatever, you know, when you all just looking at it or whatever, then you all really want to impress these clients or whatever, you all know the secret formula that we as insurance agents use. So we got replacement costs, and we're going to break down a whole insurance quote you'll have on there. They have dwelling. So you will know that your dwelling is $310,000. Then you will have next coverage, which is personal property. And most of the time, personal property
Is 50%.
10. But no, you're right. You're right. 50%. I'm jumping the gun right quick. Then you'll have other structures.
Other structures is 10%. And loss of use is 20%.
Hold on, Ms. Erica. You'd have got 2 Jason Daly boxes today. Other structures is like your garage, it might be your patio or attachments or whatever. Other structures can even be if you had like a detached shed in the backyard. They usually do 10% of that. Personal property, I'm gonna just put PP, is 50% of that right there. And then you have loss of use, which is around 20%. Now, loss of use is basically if I'm out of my home for whatever reason, you know, something's bad happened. Well, your insurance company will allow you so much money to go get a hotel, get another rent house, whatever you need to do. You might even go stay with parents or whatever for a little while and pay them some rent or do something. They will give you 20% of this right here. Personal property is usually 50%. And in a lot of cases, I can't play with this number, but this number and this number, with not all carriers, but with a lot of carriers, I can go down a certain percentage on those right there. I can definitely go down a certain percentage on those right there. They're kind of strict on loss of use. They usually don't budge on that. So they usually don't budge on loss of use. I have a few carriers who will, and they don't budge on dwelling amount or whatever. Then you have deductibles. Just like in car insurance, like you have $500 deductibles, which is basically saying that if your damage is $2,000, where the insurance company gonna pay out $1,500 because you have to reach that deductible first. In most cases, on all perils is lightning and fire, basically. We do 1% deductible. So you know that you'll be paying 1% of this amount right here. On wind and hail or hurricane, in Texas, I don't know, 5 carriers who would do 1%, but most of them do 2% on that. They can get a little high on wind and hail because, again, you are in Texas. So, but I do have a few carriers. Now, another thing that me as an insurance agent run into with people is this right here. We're getting this loan going, but we have a debt to income ratio problem. And a lot of people, well, who becomes the GOAT then is the insurance man. Can you raise those deductibles? What you can do for me? Yeah, I can raise those deductibles, but I'm gonna explain to that client, I may raise your deductible 5%, which is gonna drop the rate or whatever, 5%, but 5% of 310, who have a calculator?
That's 100, yeah.
What'd you say, Erica?
That's 15,000, about 15, over 15,000.
A little 15,000.
Oh, I'm sleeping again.
So let's just say it
Yeah.
is
500.
Yeah, it's
15.
15,500.
15,500.
15,500. Thank you, Ms. Erica.
I will, a minute later.
So this is what, before the insurance carrier pay a dime, this is what you have. So guess what? Let's say the damage that was caused was just $8,000. Well, guess what the insurance company is paying? Nothing. Your damage would have to be over this for them to pay out.
Yeah,
So-
that's true.
So let's say, for instance, the damage was 20K. Well, they're gonna pay minus the 15.
Right.
So it's like I usually tell people, because again, one thing that I believe in, because usually once I sell you a homeowner policy or whatever, trust me, I'm an insurance agent and I'm a salesperson. So I'm going to try to sell you some car insurance. I'm going to try to sell you some life insurance, some flood insurance, some pet insurance. I'm going to try to sell you anything I can sell you. But usually I call my client, and again, a lot, and that's what I want you guys to be careful of as going into the real estate business. If you all refer an insurance carrier or whatever, and that carrier just write that policy or quote that policy, and we get the closing, and after we close or whatever, or during closing or whatever, that insurance agent, not the carrier, but the agent, me, don't call and introduce themselves to that client, not to you, but to that client, that's not a good agent. That is just not a good agent. Because again, I run into a lot of times, even when people are refinancing their houses and they'll say, hey man, you know, I got insurance. Well, who was it with? I don't know. Well, who was your agent? I don't know, my realtor referred them or whatever. That insurance agent should make an introductory call to those people right there. And it's one thing about our company or whatever, once we quote, not even bind, but quote, we have to put it into another system called HawkSoft. And in HawkSoft, it stores that client information. Every time I email that client, it has to be dropped in HawkSoft. So when that client call our office because they're having some problems or this, that, and the other, and the customer service rep, she says, ma'am, what's your name? She give her a name, or they can get a phone number or whatever. Everything that has happened from day one, every email, everything is in that it's in HawkSoft, in your profile, and that keeps everybody on the straight and narrow that way. So, you know, you look for an agent who have some of this type of stuff right here. And again, one that's going to answer that telephone and get you a quote back within 24 hours is what you look for in an insurance agent. And like I said, cheap is not always good. It is just not. To me, I do not write a policy without water backup. I just don't. You know, water backup is probably an extra $50 for $5,000 to $10,000 worth of water backup. Pipe bursts in the house, water backup, commodes overflow, those bad behind kids be done overflow the tub on the second floor. You won't, and when the person, usually, and I'm just be honest, one thing about it, sometimes my honesty gets me in trouble, but I don't even give the client an option and stuff like water backup. When you send me a quote, say Humber, quote this person, it's going to already have water backup in it. Now, if the client refuses that, what I usually do is send them a refusal letter and make them sign it saying you refuse this coverage right here. Because what happened is a lot of times with these agents, they haven't told people about these different coverages, which we call endorsements. They haven't told them about it. And then the client have a problem. Say, well, you didn't tell me about that right there. And if they got a good case, you can be sued as an insurance agent for that. So, you know, we like to have our documents in order and everything. And also with our company, since we at the end of this again, we're ABM Insurance, and like every realtor or mortgage person who send us a client or whatever, once we put it over in our HawkSoft system again, it says source. What is your name? Shay what? Shay who?
Dean.
Then when it says source, we put Shay Dean in there. We have all the Shay Dean information. That way she get newsletters with our clients every month. And we also, not much, but our company sent her a $25 Visa gift card.
All right.
Yeah.
Every time?
Every time.
Money.
I'll take it.
Yeah, every time.
That's whether they sign up with ABM or not.
No, we gotta close that.
Okay, I'm like.
Yeah, we gotta close, y'all have to close, and like, one thing that our company is big at, and you'll get fired for this if you don't do it. Every Friday, we have to send out handwritten thank you cards with Starbucks gift cards in them. I don't care what you wrote, come Friday, you better have, and you hear agents in the office and, oh man, I gotta do thank you cards today, and you see them going to the comptroller saying, I need 25 Starbucks cards, I need this. And throughout, and like I said, when it's changes in weather and everything, our company sent out text messages saying, hey, it's a change coming in the weather, blah, blah, blah. And those are just some of the things you look for in insurance companies. And again, you want to find a company that has a CSR program. We have a group, that's bilingual, and they do nothing but come in the office and do customer service work. So, and again, ABM, we write auto, home, life, flood, commercial. We're huge in commercial, and we do health insurance. I don't mess with no health. There's too much paperwork in that stuff right there. So that's about the end of my presentation. I hope I bored you all enough today.
That was very informative,
I
very
hope
entertaining.
that we got all my people out there on Zoom. I have what so many people.
Oh, I'm sorry. Why?
Wow. Okay.
Sorry.
Hold 1 minute.
Do better, Shantae.
Okay.
I was in Atlanta this weekend and I forgot these. I told my wife to put them in a purse, and she said she didn't put them in a purse because she took her small, cute purse. And I blind the whole weekend. I couldn't read menus or nothing. So let me put these on and see what you're asking here, Miss Shantae.
She just want to know.
Okay, my question was, during the winter storm when so many.
Because that's a good question. That is an endorsement on your insurance policy. That's an endorsement. Pipe coverage. People don't know that. Again, so many and oftentimes all we're trying to do is, and even me with being ex-mortgage guy, one of the, and this is just me, so don't nobody get offended. One of the craziest things I hear real estate professionals say, you just want to get in this house. Nah, it's more to a house than just getting into this house right here. And so when it comes to insurance or whatever, yes, I can write you a basic policy with dwelling, other structures, this, that, and the other, and no endorsements on it. But if something happened, and then on the flip side of that, what'll happen is this client don't have this endorsement, they don't have this. Well, they're gonna be mad at me, but guess who they're gonna call a year later? Because you're the one who referred this person to me, girl, and who is this such and such? So again, that's why, Miss Shantae, because it's an endorsement that most people didn't have.
And answer your question, Shantae?
Yes.
The question is, Shantae?
Yes.
All right. Anybody else have any other questions?
I just have one more question. When you spoke about the deductibles, right, and people on high deductible, is it true? Sure. Is it true that when you put in that claim and your claim is denied because the amount of repairs doesn't cover, is less than the deductible, that still count as a point against you? That claim still counts, even if the insurance company does not pay you out.
Absolutely true. Hey man, look, let me tell you something. Right. If you can get in there and do that little repair yourself. It's gonna cost you a couple of $100 to do it. Go ahead and do
You
it.
do it, right.
Instead of, because whether the insurance company pays out or not, that's still gonna be a claim against you. Off the record, let me say this to everybody, off the record, since we're on that right there, and we're not dealing with auto today, but let me tell you about auto insurance. You have roadside and towing on your auto insurance. Every single time you use that, that's a claim against you.
Really?
Yes.
Well, they need to stop tripping because we paid for it.
I
That's on the
understand.
side of the road.
You know, I'll quote somebody auto insurance, and when I hit that button to run your background, your reports, I'll say, man, you had 7 claims last year. I ain't been in no wreck, humble. Said, you got told this day, you got told that day, you got told this day in that old raggedy car. You knew that car was raggedy the beginning, but now really, so that's just a little off the record FYI. Every single time you use roadside or you use towing, that's a claim against you.
Okay, but I do have my question. Well, like Erica said, well, why is it still counted against you even if you file a claim, but they didn't pay out?
Politics.
Yeah, maybe.
You know
But that'll
what?
keep you
I
from
think
going
that was-
somewhere else, you
I
know, because
think
they'll
that
be
was
looking.
Miss Erica answered the
Mhm.
question, Miss
Mhm.
Chantel. It's
Okay.
just straight up politics.
Okay.
I'm sorry, I'm sitting down now. I'm back, y'all.
Okay.
It's just straight up politics and insurance, like with anything and everything else. And even me, as an insurance agent, I see a lot of stuff that I don't think is right or whatever, but it's just the way it goes. Right now in insurance, and I'll be honest with you, right now, we as insurance agents, every and anywhere are complaining because we have had about a 25 to 30% rate hike. I guarantee you all, when it's time to renew your homeowners or car insurance at renewal, I guarantee you almost you're gonna have a rate hike coming up.
That's unfortunate.
It's unfortunate. It goes with everything else. Like I said, have you been to the grocery store lately?
Mhm.
Yeah, so everything has gone up. Look at the price of houses now. They've gone up. So everything is going up right now, include insurance. But again, that's what you look for in an agent is somebody who's gonna listen to your client, take time with your client, answer the phones for your clients, and just get the job done the fair, honest, and right way. And all you people out there in on Zoom, my name is Phil, Phil. Last name is Humber, Humber. Phone number is 281-960-0763. And my email address is Phil. I'll wait for you to finish writing that down right there, Mike. And my email address is Phil, Phil, at getagreatquote.com. Phil at getagreatquote.com. So happy camping. Let's go close on some houses, people. Good luck to you all.
Hey, thank you so much, Phil. I really appreciate
Thank you, Phil. You were great.
information. Great information, man. And
Thank
appreciate
you.
Thank you.
Too bad y'all couldn't get none of these sandwiches.
Hey,
but,
man, sandwiches today, guys. I'm a little disappointed right now.
look at y'all and disappointed Phil.
Oh,
Oh,
I'm
Phil, I don't want this.
But don't worry about it. It was on Confidence Dime, so who cares?
Good for your taxes.
I got a question though,
Sure.
about the, you said when you do the roadside,
Uh-huh.
so I had roadside assistance through my phone company, does that count too?
It's just insurance.
Like if you use AAA, but your
It's gonna
regular
count.
insurance.
It's gonna count. Put it like this, every time you use roadside, it goes into the MVR database.
Really?
So they know, yes.
Oh my
That's
goodness.
very unfortunate, because being a
Why?
realtor, we go through new home communities and I get a little nail in my tire and I need some help. So.
Why would
Call
you-
your boyfriend, he can come help you out.
Why?
So yes, anytime it goes into the MVR database, once I hit that MVR report and see what I usually don't do to people at all, whether it's auto or home insurance, what I don't do is, and like when you call your auto company and they give you this quote, they say, okay, it's gonna be $150 full coverage. You're like, yeah. And then they say, well, we're gonna run your reports. And then they come back, ma'am, it's $275. No. When I call you, I've ran your reports and everything. And the number I give you is the number I give you. And another thing we don't do at our company, let's say that Progressive say your down payment is $200. It's $200. We don't do all that, add an extra 100 on that. Nah, we don't do it about no dry hustling. Excuse me for using street lingo, but we don't do no dry hustling. Whatever that carrier say it is, they pay us good enough. That's what we go with. And once you call me with a quote and I call you back, everything about that is what it is.
Sir, I gotta get.
Go ahead. Thank you. Take you a few of them lunch boxes, Richard. Get on out of here.